We wanted to get you kind of updated. We don't have a pivot until later in the month. Our next pivot is roughly the 25th of June going into fourth quarter. But I had said, summer is generally bullish. Q2 is the most bullish month of the year. And all of these market makers wanted out. I said, keep this trend line was going to pivot. We did pivot last week. I said, probably near 6,100 is where market makers were going to try to get FOMO buyers to buy to get out. You still have these guys at 6,200, but nobody wants to get restuck into the nosebleed. So I said anything under 60.50, you're shorting 58, 59.83, 59.17, 58.30. These are your stops running. So if 60.50 rejected or 59.83 breaks, you're shorting, but just keep your stop loss side. Don't assume we're going to go down because there's a lot of micro levels. If we hit 59.17, you're still just moving your stop loss. We hit 58, 58.30, you're still just running your stop loss. You can keep shorting, but again, summer is generally bullish through Labor Day, so just run your stop loss. If we break above any level, so for example, if we go under 59.83 and then we come up, close your short, take a long back to 650, right? Because the market is going to go look for liquidity, trap some bears, and then keep going because market makers are here to trap shorts and make money throughout the summer. So anything above 59.83, you're back to 650 and ping ponging, right? 59.17, again, you're running stops on your short, back to 59.83, so on and so forth. I want to see um a retest of, so this is the inverse head and shoulder that I said was working out, but I didn't like this right shoulder. So what I want to see is kind of this area break down and become a better shoulder by coming down to at least 55.70. That might be a little bit wishful thinking, but somewhere in the 57.36, 56.64, grab some liquidity, trap some bears, and then end up somewhere up here 6,500 by the July OPEX. Maybe August OPEX. Because if the numbers are correct that I'm seeing, CPI is rolling up, but unemployment is collapsing because, as Powell already had indicated, you deport the migrants, and it's not political. It's just that they're the cheap labor. Costs go up, right? You want to pay American? Well, Americans cost more in labor, and without rate cuts, companies are just going to come back to say, fine, we're going to hire one American for every 50 migrants that we had. So the market is rolling over, as I said. Now, if we break up, if again we hold any levels, 59.83, you're already running your stop loss from the 60.50 short. Don't assume we're going 59.17. The market can simply trap because there's a little bit of supply here. Come back up, break this new downtrend line, and come back and retest this. We want 6,500 to be able to short. I have some puts just because I think I had said that next CPI was going to be hot. Usually into the first week of July, the market rolls over to start off Q3, take some immense profits from here, right? Trap some bears, get everybody excited that the market's over, so on and so forth. But this could be an awkward double top, just like this was an awkward inverse head and shoulders. But don't assume. A lot of people thought this was a major rally, then this turned out to be a bear flag, right? You just don't know. The bias of charts is that we go up 60%, 60 to 70% more in the summer than bearish. I know everybody wants to be a big bear because puts pay. Trust me, I know, but you got to go with statistics. The market is probably going to hold 58.30 right here, which was previous resistance for this. It's going to probably retest this support. And this is kind of where I'm looking at for possible longs into, let's say, CPI July, right? We're going to downtrend, 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 and then maybe somewhere around here, CPI. If we don't completely collapse, let's say to 56.64, any of this area, this is where I'm hungry to take longs. And come back up for July, August OPEX. If this is a bearish, excuse me, if this turns out to be a bearish summer, it'll be the first bearish summer in 21 years. Are we due? Yes, but I go with the running statistics, and we're not rolling. Today's a holiday. We're not rolling over very heavy. But again, you short when you can when the level breaks down. But just run your stop loss. Don't assume, oh, we're going to collapse. We're going to come back down here because Limitless said no, no. This could turn into be nothing. Markets roll over. Markets go hunting for liquidity, so on and so forth. Do not assume. Okay, if we hold the level, and I just got an alert. But I don't trade low holiday runs. Um, we'll be back to trading maybe Friday or even Monday, letting the sort of a 4-day weekend come in. The market already knows from Powell that rate cuts are not coming. He doesn't like what he's seeing on the unemployment numbers, but I suspect he's actually going to have to cut rates so that employers could refinance to be paying for labor, because cheap labor is coming to an end, as it was in Trump 1.0. Not political, just stats are stats. 2016 chart is basically running identical, almost to the day, with the same riots, the same global calamities, um, are running again. So I say, look at the history rhyming and look at your levels. So if 59.83 holds here, you're taking along to 60.50. If 59.17 holds, you're taking along to 59.83, so on and so forth. But let the market give you a good bleed. Let the market fail. Give it a couple of days for trend, right? I said to people, if we go above 60.50, we're going to go long to at least 6,100. I believe we're still going to come up here later in the summer, because what's going to happen is the market's going to give, now that Powell has told everybody that the CPI is going to be bad, the market's going to front run it, probably trap everybody here, go up thinking, oh, that's a one bad CPI. But CPI is rolling up, for the remainder of the year, because labor costs are going up, so on and so forth. CPI can't go down when labor costs are going up. That's mathematically backwards. The only time inflation has gone down is World War One, World War Two, 9/11, and COVID. It takes a calamity, some sort of disaster, to bring down demand destruction, to get people to stop buying, and we're starting to see the data. But again, one level at a time. If 59.83 holds, you're taking a long. But let a couple of days kick in. When this rejected, I told everybody, don't be in a rush. Wait till the second or third day of trend and then the rejection of the trend line to come down. We have no, I mean, this is the best, the only trend line that I have is at 5,300. I doubt we're going to get that low. Um, we could easily see some sort of protection. So, for example, if I move this here, we could see some sort of protection, somewhere around here, where the market says, okay, we're not going to go that low. We're not that crazy. Turn this line into a little bit of support. Come down here to, let's say 56 and change. It's all subjective, right? We don't know where the market might turn something from support to resistance, but let's just assume that this was, or even here, the market could take this prior line that was resistance into support. Again, it's all subjective, where I put it, but let's just say I take, okay, this was a support area, and I put a little just trend line right there, trend line right here, to see that there's a tiny gap that never filled. The market may want to see the gap come down to 5,600 by, let's say the end of June, or the beginning of July, into Q1 rollover, and then off to the races. So one level at a time. Don't assume if you shorted where I said 60.50, just move your stop loss. Don't assume. If a level recovers, you're taking more longs in the summer than you are short. Okay. Summer has been bullish again, 21 years. Don't assume that it's going to be bearish this time around, because you might be on the wrong end of it. But if you shorted with me, congratulations. All you're doing is rolling the stop loss. If you'd like to learn how we do this, comment below, and we love to share our ideas with the public and learn some financial freedom. Good luck.